Okay, trying something new, so hopefully you can see my screen. Um, yeah, we'll see if this works. If not, I'll just delete the video and make a whole new one, so no worries. But again, I'm not the most tech savvy person, so we'll see how it goes. All right, guys. Hopefully you can see my screen and you can see the picture of this property. I wanted to do a case study for you today to kind of go over, just because I haven't done a case study in probably a couple weeks, so figure I'd do one for you. So let's jump into it. What you see here is obviously a vacant lot, and this deal was a tax sale deal. Okay. This was one of the not the first deal I did, but one of the earlier deals I did when I first started getting into overages. And it was kind of an interesting deal because for a couple of reasons. Number one is the property was not in the name of an individual. It was in the name of a company. So I had to find the owner of this company in order to find out who was entitled to the overage. Well, when I started doing my research, I found out that the company was no longer in business. So it was what's called a defunct corporation. It was no longer in an active registration status with the state. And so that made it a little more difficult because, there were no current filings with the state. And so I had to do a little, dig a little deeper as far as the research goes to find the owner of this business that owned this property. Long story short, I was able to find the owner of the business, was able to get his contact information and reach out to him and told him about the property. And it was really funny. He's like, oh yeah, I completely forgot about that property. So yeah, I mean, he owned this lot in an LLC. The LLC went inactive, and I guess he just didn't get the notifications for, the tax sale or whatever, and he lost it. He lost it at a tax sale. So that was the situation. Anyway, I told him there was some money there, and he said, "Great, let's go for it." And the funds at this point had actually were at the state level, so we had to go through the state to get the funds. And so it was quite the process. Dealing with states it's all right. It's not, based on my experience with states, I don't like dealing with states. And the reason for that is it takes a long time to get the money, in my experience, and two, there's no control of the process. You're basically at the mercy of the state, and so they can make you jump through a lot of hoops, which in my case they do. They try to make it as difficult as possible. Whereas when you're dealing with courts, there's court procedures, and as long as everything's done by procedure, then there's really, and you can prove, that you have evidence for the basis of your claim. There's not a whole lot. I mean, they can delay things, but eventually you're going to get that money. So that's why I like dealing with courts. Counties can also make you jump through hoops. So it is what it is. But anyway, so we got all our documents in order, submitted the claim. The state came back 2, 3, maybe 4 times asking for additional documents. Because the business was defunct, we had to really prove our claim and submit a lot of evidence. Anyway, I think it was about 5 or 6 months later, we finally got our check for $16,000, and my net profit on this deal was about $6,600, as you can see. This was a deal where I did not use an attorney personally. And I don't know if an attorney would have helped speed up the process because it was, the funds were with the state, as I mentioned. So, a lot of people I know are asking, do you always have to use an attorney? No, you don't always have to use an attorney. It's really case by case specific. If the funds are with the court, you're probably going to be better off using an attorney. If they're with the state, if they're with the county, depending on where you live, you may or may not want to use an attorney. A lot of counties, Georgia is a good example, are starting to crack down. They won't issue checks to third parties. So in those instances, even though I'm dealing with a county, I do use an attorney to help me with that. So it just depends, right? It just depends on where you live and your market. And that's why it's so important to know the laws. And I've said that before. But yeah, but as far as time invested in this case, I would say, it probably took me a couple hours to do the case, or to research, to find the guy, to find the business owner. It probably took me a couple hours to find him and to contact him. There was a lot of documents we had to gather, so that probably took a couple more hours, gathering all the documents from the business and submitting our evidence. So now we're probably in about 4 hours. Going back and forth with the state and getting everything, that was probably another 5 hours total. And so, so what, we're about 9 hours in, and then just miscellaneous things. So maybe 10 hours. We'll be conservative and say 20 hours tops is what is the time that I invested in this deal. And then again, it was about 5 or 6 months on this one because of all the hoops we had to jump through. So my average case is 3 to 4, but sometimes you have some that are longer, sometimes you have some that are shorter. So it just depends. But yeah, this deal was about 5 or 6 months from start to finish, but only about 20 hours invested tops on the deal. So that's not bad, $6,000 is pretty good money for 20 hours in the deal, right? I mean, what is that? $300 an hour? A lot better than what I was making as a corrections officer. So yeah, hopefully that helps, guys, on this case study. We got some comments. I've never done this before. How long did it take you to complete the transaction? 5 to 6 months is how long it takes. What all the documents you need to do this type of deal? A fee agreement. We needed all the business documents to prove, that we were entitled to the proceeds. So, for this one, it was a little more advanced because you have to provide those business documents. And when I say business documents, I'm talking about articles of incorporation, articles of ownership, just proving that my client was indeed the owner of this business. So that's, but other than that, just the business documents, fee agreements, copies of ID. It really just depends again on the state and whoever's holding the funds, they will have their requirements on what they need as far as documentation goes. So that's it for now. Hopefully that answers the question. Anything else I can tell you about this? No, obviously you're not dealing always with single family homes. Obviously this is just a vacant lot. So, there can also be surplus funds generated from multifamily and commercial units. Surplus funds can be generated from a wide variety of properties. So, yeah. What other questions? Have you ever looked into any other courses on this other than Bob Diamond and Spencer's? Yes, I have purchased both of those courses. I have done reviews on both those courses. Bob Diamond's was the first course I ever purchased. I like Bob's, again, because it was the first one I bought. And because I followed it, I was able to do a couple deals. The only downside with Bob's is I have heard, now I purchased it in 2015. I have heard that it hasn't changed much since then. And so the cons to Bob's are he does not teach mortgage overages. He only teaches tax sale overages. So that's a con, I guess. And I've heard that some of the videos are somewhat outdated, is what I've heard. So, and I will say I have not some of the strategies he teaches, I don't always go for. Using powers of attorney and stuff like that. I hardly do that. So, but I love Bob's course, and but he only teaches tax sale overages. Spencer's course is fine. It's probably the most expensive course out there on the market right now. I like Spencer's course because it helped me break into California, which is a very competitive and difficult state to be in. But because of that course, I was able to break in there and start doing deals there. So it was a good investment for me. What else can I say? So yeah, but I think his is the most expensive. I think it's like $2,000 or something like that last time I checked. So obviously, and you can check out my reviews on both those courses on my YouTube channel. Obviously, I'm kind of partial, because I did launch my own course a couple months ago. And in my course, I do teach both tax and mortgage overages. So that's one of the good things. Plus, it's not the least expensive, but it is cheaper than Spencer and Bob's course. Right now, it's at $12.99. So, where did the funds transfer to? I got a check in my business name. So, yeah. And again, there was no attorney used on this deal. Where do you get the amount for mortgage overages? You subtract the amount owed from what it sold for. Is the most simple way to put it. So that's how you get mortgage overages. Again, subtract what was owed from the amount that it sold for at the foreclosure auction. Well, cool. Well, this is good. This is the first time I've done a live, so it's kind of nice. I can answer questions live and in person, so that's cool. Let me know if you guys like this. Usually I just record videos and don't really have interaction, but if you like the live, let me know. And yeah, if you have other questions, let me know. Hopefully this was helpful for you guys, this case study. Again, this was a tax sale overage deal, and put about 20 hours in, got $6,600 out. There was no attorney used on this one, so my expenses were very minimal, probably less than $200. Yeah, that's pretty much it for today, guys. What I'm going to do, subscribe to the channel. If I can figure it out, I'm going to post some links to my course. These are discounted codes. So if you're interested in learning how to do deals like this, where you profit $6,000 and only put 20 hours in or less, then you can check out my course. You can go to overagesyndicate.com and you can watch the videos there. And I'm also going to put some links in the description below that'll give you 25% off the course. So I'll put 10 of those links in, so there's only 10, and they're first come, first serve. So once they're used up, then they're used up. And hopefully I'll figure that out. Again, this is my first live stream, but I'll post the discount links in the description once I end this recording. So that's it. We have a couple more questions. Yeah, this is cool. So do you have to go to all the auctions? No, you don't have to go to all the auctions. You can track the foreclosure sales via online purposes. There's a lot of data providers out there where you can, basically find out what properties are going to auction in your area. And then there are some data providers that will tell you what happened at the sale. So there's one of four results. When a property goes to auction, it can either, number one, the sale can be canceled, and that's usually due to a bankruptcy or the homeowner is able to pay off the loan or reinstate it or bring it current. So that will cause a cancellation of the sale. That's one option. Number two is it goes to auction and it does not sell. So when that happens, when a property goes to auction and it doesn't sell, then the lender or the bank just takes possession back. And in those cases, there are no overages created. Number 3 is it sells to a third-party investor. And sometimes it will sell for more than what is owed to the lender. And number 4, it can sell, but sometimes the opening bid, not always, but sometimes the opening bid is less than the amount owed. So really the only time that an overage is created is when a property sells at auction to a third-party investor for more than what's owed to the lender. Or if you're talking about tax sales, it's when a property sells at a tax sale auction for more than what is owed to the county for property taxes. So that's something that people get confused on is, well, what if the bank, say it doesn't sell at auction, but then the bank resells it for more than what was owed later? That's still not an overage because the bank at that point owns it. So they are entitled to the funds. But yeah, you just use online data providers to get all that information, so you don't have to attend the auctions. What's the average amount of hours you put in per case? I'd say somewhere between 10 and 20 per case. So, yeah. Curious if you've heard of Sean Bougie's program, which you can be a researcher of debts. Yes, I've bought Sean Bougie's course as well. Great course. It's probably one of the cheaper options out there. It's just an ebook. It's just a PDF format. There's a couple videos in there as well. I have not worked for him as a researcher because I've not needed to. If I'm going to do a deal, I'll just do the whole deal myself. But I like Sean. He also teaches a lot of other strategies that you can use with tax sales and foreclosures. So, but yeah, that's all I can really say. It's a good ebook. It's a good ebook. It's valuable. Do you have a link? Yes, I'll post a link in the description once this live stream is done. Angie, I don't know when my next video will be. Just subscribe to the channel and that way you'll get notified. I just started doing this, so I'm just kind of, again, this is my first live stream, so I'm just kind of figuring it out, see how it goes. Which do you end up running into more, saturation with competing people or just complications through the process of getting everything lined up with the claimant? That's a great question. There is competition, but there's competition in anything. So when I first got started in real estate, I started out doing wholesaling, and I've done a couple wholesale deals. And if you compare overages to wholesaling is much more competitive, at least in my experience. There's just so many people out there trying to wholesale and find properties, and not to mention, you're not only dealing with, wholesalers, you're dealing with fix and flippers and landlords. Everyone's going after the same deals. So that's why I like overages. I found that there is still competition, but it's not as saturated as, say, wholesaling. So to answer your question, obviously there is competition, but probably most of my cases fall through because of complications, not competition. And that's because I'm pretty aggressive when I go after, cases. And this is kind of going into the weeds, but even if there's liens on a property, depending on what state it's in, I will still go after the overage. But that's just me. So I don't know if that really answered the question, but I'd say complications come up more than competition does. What are the websites find out how much the property sold for? So that's great question. let's see, find out how much the property sold for. Well, here's the thing with that. You don't need to use a website to find out what a property sold for. Just use your public county records, and you can find out what it sold for on the deed. So that's a free way to do it. Texas, 20% is for tax sale overages. I'm not aware of any fee limits for mortgage overages in Texas. Awesome. All right, guys. Hopefully that was valuable. I'll post the links to the discount codes in the description once I figure that out. And yeah, subscribe to the channel so you can get updates, see the other videos. If you have questions, leave them down below. Subscribe to the channel. Maybe I'll do one of these once a month or something. We'll see. And yeah, we'll see you later. Have a good day, guys.